Alpha Metallurgical Resources is a favorite stock for Mohnish Pabrai. It is his biggest US investment and he's still adding to it almost every quarter. So today we are going to go through our 7-step analysis process to find out why. What does he see in it? Is it really such a great investment opportunity? And spoiler alert, it is. Alpha Metallurgical Resources is the largest producer of metallurgical coal in the United States, essential for steel production worldwide. The company also produces thermal coal for power generation. It is operating 22 active mines and 9 coal preparation and loading facilities. If you invested $1,000 in this company when it was incorporated in 2016, you bought 59 shares. And today, they would be worth something close to $14,364. And this company also pays dividends, so in that time you would get $185 as dividends. So if we add together the current value of shares and the dividends, we get $14,549. And that is a gain of 1,354% since 2016. Not bad. Not bad at all. So let's see who benefited from this growth. Individual insiders, that is a check. 11.5% of the company is owned by individual insiders. So that is great. We know that the management should take good care of the shareholders because they are the shareholders. And are individual insiders buying? That is an X. We see only a number of sale transactions in recent quarters. And do super investors own this company? That is a check with 2 super investors. And they are Mohnish Pabrai, and this stock makes up 45.9% of his US portfolio, and Guy Spear. But for him it is only 0.6%, so nothing meaningful. And are they buying right now? That is a check. Mohnish added another 30,000 shares, and this represents a 6.85% increase in his investment. So let's try to understand, why is he so bullish on Alpha Metallurgical Resources? Return on invested capital, that is a check at 28.2%. And we want to see this number higher than 10%, so that is extremely nice. And what do we know about net profit margin? It is a check averaging 5.2% over 5 years. And the sector median is 5.1%. So basically they are exactly in the middle of this sector. They are not lagging behind, but they are also not setting the example. And now let's take a look at share buyback. It is an X. They issued extra 27.1% of shares since the creation of the company in 2016. But to be fair, since 2021, they have a massive share buyback program. So in the last 4 years, they bought back 30.4% of shares. And the debt, it is a check. They almost don't have any debt. And they have so much cash that for every share of this company, we get $37 of cash in their bank account. But financial health is just one aspect of this equation. While we aim for our companies to remain robust, we also want them to grow. Revenue growth, that is a check at 13.2% compound annual growth rate since 2016. And we would like to see this number higher than 10%, so that is a nice growth. Free cash flow growth, that is a check at 17.2%, so that is even better. And earnings per share growth, that is another check at 22.8%. This is very impressive. But we can't forget that it is a cyclical business and growth rates may change very fast. So even though it looks great, we should curb our enthusiasm. And now let's see what can we get for just holding the shares of this company. The dividend yield is 0.8%, so shareholders can expect to get $1.94 annually per every share. That is a very low yield. And the payout ratio, that is an X at 3.9%. And we want to see the payout ratio somewhere between 20 and 50%. So this dividend appears to be very secure, but we are not receiving a significant portion of the earnings. And what about dividend growth? It is an X. They are paying dividends only since 2022, so we just don't have enough data to analyze its growth. So we know a bit about this company already, and that is very useful, but an investment only makes sense if we are not overpaying for it. Price to earnings ratio is 8.6. That looks encouraging. We basically have to pay $8.60 for every dollar this company currently earns. That may be a nice deal. But to calculate the intrinsic value of this company, we will use a discounted cash flow analysis. And if you would like to know how to value companies by yourself, head over to stockinvesting.academy and choose our company valuation course. Okay, so first we have to estimate the growth of Alpha Metallurgical Resources. So in the low scenario, we will estimate a growth of 3% for the first 5 years and then 2%. In the medium, 5% and then 4%, and in the high scenario, 7% and then 5% growth. So the low scenario is close to the predicted growth of the industry, which is around 2.9%. Medium is showing a story in which they will outperform the industry. And the high one is predicting that they will grow much slower than recently, but still at a very decent pace. So with such estimates, the intrinsic value in the low scenario is $433, in the medium $494, and in the high scenario $549. Now, we must always apply a margin of safety to those prices. You can choose any margin that makes you feel comfortable. The key idea is to ensure that even if our growth predictions are incorrect, there is enough buffer to prevent our mistakes from taking us out of the game. Personally, I use a 30% margin of safety. And with such a margin, we get in the low scenario $303, in the medium $345, and in the high scenario $384. And the current price is around $224. So it is all in the green. This company looks really nicely priced at the moment. So we have the most fundamental informations about this company, and now let's try to put everything we learned into perspective. So there are a number of things to like about this company. The management has a lot of skin in the game. It has a nice financial health, promising growth, but it may change due to the cyclical nature of the industry. But the management is optimistic about the long-term prospects with new mines like Kingston Wildcat starting production next year. And the company is also very nicely priced. Let's actually compare it to over 100 companies from our Stock Ranking Pro. It is an 11th cheapest company at the moment. And if we open the overview, we see that it is a well-rounded company. Financial health and growth are nice. Investors like it a lot, and only the dividends are not too impressive. But if we have growth, then it is fine. It seems clear that Mohnish Pabrai believes metallurgical coal, which is currently essential for steel production and cannot be easily replaced, has a promising future. As long as the world requires steel, there will be a need for companies like Alpha Metallurgical Resources. Thanks for watching and see you in the next one.